Pull up HDFC Bank and Bank Nifty. In the last 10 minutes, there is some kind of a rebound being attempted. HDFC Bank has come back into the green, and that will help Bank Nifty to stabilize quite a lot. But apart from that, overall market is not doing a whole lot. Deven Choksey is also joining us to talk more about markets. Deven, afternoon. Deven, there is a view emerging that this correction actually could be a corrective sideways. There may not be a massive price damage in the mid caps from here on, 15, 20, 25, 30, 40%. Whatever has happened, but it may not, runaway rally may not resume anytime soon. How are you approaching the mid cap end of the market now for your clients? Have you started cherry picking or not yet?
Yeah, very good afternoon.
Very good afternoon.
I think most of the companies where you are seeing the price damage which is taking place, they are happening largely due to the mid cap, small cap saga which the market has found itself victimized in. In my viewpoint, I think this correction had to happen, has happened in some form or the other. Maybe reason can be anything, but this correction had to happen. In a way, it is a good correction, though I think it is resulting into significant amount of losses for many of the traders who bought in the mid cap, small caps on the basis of liquidity-based push that the market was experiencing. Currently, among the frontline stocks, also some of the stocks are showing a negative performance. That is where I feel more comfortable buying into, because if these stocks, the fundamental strength that they have, in my viewpoint, I think they become buy opportunity in the current market. So yes, you are absolutely right. I think this is the time when we probably look at the companies individually and start adding them into the portfolio, particularly some of the frontline companies, with a view that this price correction, which is currently happening, would probably, I think, get squared up at some point of time before the election-based rally start, pre-election rally starts. So maybe I think month of March is going to be a washout month, as one has also seen in last 10, 12 years. This one could be a washout month, and probably I think the recovery can happen with a pre-election rally in mind, somewhere in the end March or beginning April.
There would be a pre-election rally this time because election results are mostly, the market is already factoring in, right?
That's true. I guess I think pre-election rally also would be symbolic, really, in my viewpoint, of course. But more importantly, I think given the kind of strength that the government is demonstrating in pushing forward all the reforms, whether be election or after election, the business continues and I think continues with a great speed. So certainly those companies who have been receiving the larger orders, they have visibility for execution. Those entities who are receiving money in their hand, I think they have larger ability to spend money, and that's where consumption-based argument would, I think, come forward. So, in my viewpoint, even if I think we name it as a pre-election rally, it's still okay. I believe that I think overall the performance of the market will probably show reasonably good track going forward. And some of the large cap companies, I think, if they get corrected on the price and valuation, they may become the first opportunity to buy into the portfolio going forward.
Devin, just stay with us. I'm going to probe you on which those large cap companies are, but let me take it across to Ansh quickly and get in a snapshot of what's happening across the volume screen within F&O. Ansh?
Right, so in volume bursts, we'll start with TCS first. As you can see in the chart, stock seems to have given a good breakdown from its 5-session consolidation pattern, registering its biggest single session decline in over a year with good volumes of over three times its 20-session average volume. However, there's some good support as well at around 3,960 levels. Also, there was a news on promoter Tata Sons selling 0.65% stake in the stock. Apart from this, Piramal Pharma will also be in focus. As you can see in the chart, stock seems to have given a good breakout from its downward sloping channel along with good volumes of over 4 times its 10-session average volume. Lastly, Radico will be in focus as the stock has given good breakout from its downward sloping, a strong resistance trend line along with good volume, and it has also touched 2-week high. So keep an eye on the stocks.
An eye on all those buzzers. But Deven, just back to your large cap preferences. Give us an idea, which sector is it that you're looking at and finding value?
Well, I think the correction in the banking and financial space is first and foremost, I think, very healthy correction. I think those some of the banking financial names those started picking up today, but I still believe that I think you have an opportunity around. I think the likes of Bajaj Twins, where the valuations are becoming more attractive with every fall in the price. These companies, I think they suggest that they will probably, I think, remain at the top rank of the ladder, I think, as far as the outlook and the promises are concerned on that business front. So that is one such area where or one such company, I think, or group of companies we find a more meaningful entry into. Similarly, we find more meaningful entry into auto ancillary companies because of the higher amount of discretionary spending which is happening in the OEM segment, the auto segment. We believe that I think the next in queue will be the ancillary companies who would probably be demanding further amount of re-rating or corrected valuations which have already happened in the last 2 years. They may probably, I think, get re-rated from here on. So we like that particular space as well. Continue to like the capital goods segment per se. However, I think the valuations are still at peak. So maybe in some corrective downside, if at all in future one gets an opportunity, that would be also equally an interesting one to consider into. So yes, I think selective pockets where we are selectively started to add into the portfolio some of the quality names for the long-term investment purpose.
Even recently, the Adani Group has actually given out a massive capex plan in their airport division, and overall about 10 lakh crore worth of capex plan, all of that. Even EBITDA numbers, they have kind of shared that the group EBITDA targets. If one were to play one particular stock from this group, because there are half a dozen listed, right? Which one would you be most comfortable getting into, say, for the 5 year ahead?
So it would be Adani Enterprise because I think the incubation that they have been doing of different businesses, be it the road business which is being incubated, airport business which is being incubated. You have also got the renewable business which is being incubated. I think you are also coming up with the various other businesses like data center business, I think, which is being incubated. So each of these businesses which are currently being incubated into the portfolio of Adani Enterprise, I believe that at some point of time, I think they would become ready for their market journey, and thus they would probably get emerged from the Adani Enterprise and get separately listed. That's where you are likely to see the valuation unlocking taking place in these companies. So if you are looking at typically 2 years and thereafter period, these stocks, I think, could possibly, these companies within the other enterprise could possibly start showing the better amount of realization for investors. Otherwise, existing portfolio of companies, be it in the port, be it in the utility segment, they all suggest the continued gain on the existing capacity as well as I think the inorganic growth approach that they have been cultivating. So we prefer that I think the selective approach for the long term in those port business I think would probably yield better results for investors.
Enterprises, interesting choice there. Naresh, tell me, you think right now is a good entry level for Adani Enterprises?
I would wait out a little more because the stock has just started correcting, say closer to 2,800 odd levels would be an entry point. The stock doesn't look as interesting at current levels. And in the last two sessions, has actually given a short-term breakdown. So not shorting at current levels, but would wait out some more.
Okay, keeping an eye on these levels also there for Adani Enterprises, but looking at the markets, nothing exciting happening on that front. But, what's the dealing room chatter going on? We have some chatter around the TVS supply chain, and that's what we're going to be talking about. Sharad is going to be giving us more details on that. Sharad, take it away.
What we are hearing from the dealers is that TVS supply chain services is in focus, and importantly, HNI buying has been coming across several counters in the day's trade. Even if you look at the volumes, that is up almost 3 times its 20-day average, and interestingly, the stock is still down by more than 20% from its IPO price. And the IPO price was at 197 rupees per share. Analysts say that the entire selling pressure coming in from the employees, especially as the lock-in period has ended, is the main reason as the sustained buying is happening from the HNI category. Also interestingly, Kotak Special Situations Mutual Fund is having almost 1.35% stake in the company. But overall, looking at the performance over the last 2 to 3 odd quarters, there has been a weak performance coming in, be it the global freight business or even the network solutions business. Now going ahead, company did say that they are going to infuse roughly 250 crore rupees in 3 companies in the international expansion as well. So this is what the dealers have been talking about, and the HNI interest has increased when it comes to the stock.
Okay, thank you so much for that, Sharad. But, Deven, I do want to talk about some of these proxy plays that you could say coming in. If you see real estate, infra, if all that starts doing well, the proxy plays, any of the stocks that you would be looking at in the proxy play, Kajaria, Somani, or any of these other tile companies that you would find interesting?
So entire building material segment, I think, would remain absolutely strong going forward as well. Because on one side, you are seeing a continuous a construction activity happening, be it in the residential space or industrial space, or even for that matter, infrastructure space. So all in all put together, I think the construction activity or construction boom, which continues in this country for not 5, 10 years, but I believe that for 25, 50 years, I think we are likely to see this kind of construction activity continuing in this country. So given that situation, some of the material players who are typical catalyst for this kind of a growth phase, I believe that I think they would have relatively good time to talk about. Maybe I think one will have to buy some of these companies when the market price gives correction. At this point of time, I believe that market has probably run up little ahead of time, giving a valuation which are I think equally steeper in some of the cases. So where probably we believe that I think we'll have to wait for a while before buying into. Those who are basically choosing an option or a proxy for their fixed deposit, then possibly I think for them the housing finance business could be I think really a good one to get into, because that is an area where you are likely to see a continued growth of around 20% on CAGR basis for next 3 to 5 years, at least in the near term.
Okay, that's the take coming in on some of those interesting ideas. Let's just take stock of where we're settling in at for the day, because definitely today has been a bit of a step back after some bit of consolidation that you saw on Thursday, Friday, and yesterday as well. So 250 points lower is how we're shutting shop for the day, while Bajaj Finance, Bajaj Finserv, Kotak Bharti have turned out to be winners today. That was not quite case for the large part of the market. Kunal, your take on the Nifty Bank, and when do you think we see a meaningful comeback from the private banks returning?
I think as of now, we are just seeing the private sector banks trading into a range. I think except for maybe the likes of Kotak Bank, which is looking slight bit more attractive in terms of a breakout. There is a durable pattern for the stock. I think most of the other names are just whiling away their time and then trying to consolidate in a very narrow band. IndusInd Bank apparently has broken below the 200 moving average. So it's clearly an indication that this is one of the weakest of the lot from the entire private sector banking names. And the the likes of ICICI Bank holding up into a trading range just around the 1080, 1100 range for itself. HDFC Bank is also around the 1440, 1450 mark, maybe plus minus 10, 15 points is what you've seen the trading range for HDFC Bank. So I think except for IndusInd Bank, which is clearly showing signs of a breakdown, as well as Kotak Bank, which is showing signs of potential breakout, I don't see any meaningful trend emerging into the large cap private sector banking names. So which means that if the markets of the bank Nifty has to move up higher, you would need to have a breakout from at least 2 of the 3 or 4 larger cap private sector banking names. Maybe the likes of HDFC Bank and ICICI Bank could probably lead from the charge.
Naresh, you think that time is coming soon where you will see a meaningful comeback from either an ICICI Bank or an HDFC Bank? Analyze the charts of both for us.
So technically, ICICI has been showing better strength, holding about the 1050 mark. Also not far away from an all-time high. So ICICI Bank is clearly there. Then you come into HDFC Bank. Once it starts sustaining about that 1460, 1470 mark consistently, then we can confirm a trend change. But what is interesting, it's stopped falling as of now, correcting below price point. Same goes with Kotak Mahindra Bank. 1700 has been holding on. So a lot of these banking names have been showing a lot of relative strength in terms of not cracking off with the markets. And names like ICICI Bank cleared strength out there. Axis Bank also came to 1130 and then drifted lower. So would wait it out for some more time on both those banks. But overall, ICICI Bank is the first preference, and then next would be Axis, and third would be HDFC.
Okay, that's the view coming in on the banks. Deven, I want to know also in terms of some of these QSR names, what's your thought on the QSR space? Whether you look at Jubilant, Westlife, Devyani, Sapphire, anything interesting in that pack, or maybe that consumption story, maybe you don't expect to see a good pickup there?
Well, I think we do remain bullish about the entire consumption story, and I think in particular the QSR is definitely I think one which we would like to keep an eye and attention to. However, as the market is, I think market is probably running up much ahead of its time, I guess, and giving a far superior valuation premium to many of these companies. In my viewpoint, I think unless we learn the discipline of buying something at an attractive valuation or a sustainable valuation, I think we would be paying up, I think, significantly high amount of premium, which may not work good for the portfolio returns. So from that perspective, I think we'll have to wait and see before which I think we get some corrected price. At this point of time, I still believe that I think many of these companies are still remaining at a premium valuation, which probably needs to remain slightly more corrected, and then probably one could look into them.
Right, okay, that's the take coming in on some of the consumption themes, which are looking interesting right now. Kunal, just wanted to understand, other than IT, what's looking like a weak link in this market? Because, today has been one of those first days after many days of consolidation from that last week shake-off, when you're again taking a bit of a step back and across the board, mid, small caps and even large caps.
I think it's more of sentimental damage because for example, you can't pinpoint one of the other sectors like other than IT. There is no major sector which is showing signs of weakness. The Nifty FMCG index also, for example, we were discussing this earlier. Only 2 stocks or 3 stocks are trading at 52-week lows. The FMCG index is not at 52-week low. The Nifty IT index, the likes of TCS, was making new high, but the index is now below the 50-day moving average. So there are completely different divergent trends within sectors and across sectors for the markets, and I think that's why it becomes very difficult to pinpoint that which are the sectors which are lagging behind and the ones which are showing signs of incremental weakness. But then when you look at this as a pattern over the last 1 week, 2 weeks or 3 weeks or 1 month, then there's one clear trend which is emerging, that the weakness in mid caps and small caps. I think across the board over the last 2-3 months, or at least for many of the stocks, there has been a 35 to 40% cut into many of the mid cap and small cap names, which means broadly we are looking out for a stage or a point where once the mid caps and the small caps, once the correction completes by say a margin of 25 to 30% at least, for many of the names, that's where I would believe that the correction would probably end. So I think it's very difficult to pinpoint one sector which is leading the correction, but I think broadly I would sense the mid caps and small caps are one of the major ones.
Okay, surely keeping an eye on that. As of now, looking at the markets, nothing exciting surely happening today as well. Day's lowest point is what it is, just managing to grapple onto the 21,800 levels as of now for the Nifty as well. Continued fall, that one pressure that we're seeing in the IT names, IT, the top sectoral loser, down 3% as well. We have PDR, Pharma, all of them just tanking away in trade as well. What's managing to hold on to some bit of a green is whether you look at Bajaj Auto on the top, making the charts of the list over there, Bajaj Auto, Bajaj Finance managing to hold on to gains as well. Naresh, I want your thoughts in terms of the auto sector as well. What is looking attractive on the charts? What is it that one should look at right now here?
So currently, all I've been saying is Maruti is the one which has been showing relative strength. The stock has broken out above the 10,000 mark, then followed by that above 11,000. And relatively, say the stock used to be 9,500, 10,000 back in 2018. So the stock has not done anything compared to what has happened with the rest of the auto pack. So that would be the first one. Second would be looking at Mahindra and Mahindra again, if it dips closer to 1700, 1730 levels. So that would be a buy on dips. But for now, Maruti remains the first pick, and going forward, any dips into Hero MotoCorp closer to 4,200, 4,300 would be a buy. But for now, Maruti remains the top pick.
Okay, that's Maruti, the top pick within the auto pack. Today, of course, Bajaj Finance is seeing a bit of a pickup. Oberoi Realty is holding up about 1.25%. There's Bajaj Auto, which is scaling higher by about 1.25% as well. 8,600 thereabouts is where Bajaj Auto is currently in trade. Jubilant Foods is not looking bad, about a 1% uptick there as well. And then RBL Bank as well is seeing a decent pickup in trade. That stock is well holding out as we speak right now. Of course, Eicher Motors, Hindalco, are some of the other names which are relatively resilient as opposed to the other weakness that you are seeing in this market right now. Deven, we are seeing a big comeback by the entire commodity basket, be it metals, ferrous, non-ferrous, be it agri-commodities, across the board. Any play, any sensitive commodity play, either on the positive side or the negative, that you think is of, a good look right now?
If you are planning to ride the bull cycle in the commodity, probably it should be metals. In my understanding, I think the metals probably would give the first leg of a strong rally, a sustainable rally for next few years. The reasons probably this simple. I guess on one side, the world is investing heavily into the renewable alternatives, and as a result of which, I think the first level of requirement would come onto the ferrous, non-ferrous metals. That's where probably we are likely to see the higher amount of demand generation happening from the globe. On the other side, the crude oil prices by and large are likely to remain in a safe zone, as I may want to call it as. So that may probably, I think, keep the cost of energy under control. At the same time, the green hydrogen use, I think, in the production of energy for most of the metal companies would end up bringing down the cost of production for metal companies, which is structurally very positive because that should help them eventually in getting the better price realization and save them from the vulnerables of the crude oil prices to a greater extent. So these are some of the structural changes which we are observing in this entire space, and that's where we believe that along with demand generation, the cost rationalization factor is likely to help the metal commodity companies. Maybe China factor will have to be closely watched at as far as I think the dumping is concerned. But overall, I think we believe that the metal should have relatively steady domain going forward from here on.
Okay, that's the entire take coming in on the metals pack. Kunal, let's have your sense as well on the metals names. Of course, that big move that you saw is coming undone today, but do you think there's resilient strength?
Yeah, there's a lot of resilience and strength. So I think Tata Steel is one of the stronger ones in that aspect. So when a stock falls by, say, a margin of 10-15%, and if it manages to retrace more than 50% of the correction, which means if it recovers by 5-7%, after that 10-15% correction, then I believe that that's a sign of a strength. Also, on the other hand, the stock breaks past above key moving averages, resistances, etc. Then I think that also adds to the positivity for the stock price. So I think Tata Steel is, as of now, one of the stronger ones from the metal pack. JSPL, Jindal Steel, that's the other name which has been holding on to that 800 levels broadly. So I think even today the stock in the first half was above the 800 levels. But I would believe that that's also not the strong stock from the entire metal pack. JSW Steel is trying to find its feet back again, because after I think 2 months or 3 months of underperformance where the stock was also at one point trading below the 200 moving average, there is a mild pickup or mild comeback, but net I think the chart is still a bit more sluggish. So if I have to put in terms of relative strength, the order for metal stocks, I would believe Tata Steel and JSPL would be amongst the top two.
Okay, Tata Steel and JSPL is the stock that Kunal is talking about. Kunal, let's have your BTST ideas as well on that note.
So on the BTST front, Kotak Bank is something which looks attractive. That's a stock which I would suggest as a buy. My expectation is that the stock would probably come back towards a breakout of a bullish pennant formation. So 1800 as a target, stop loss at 1725. And Triveni Turban is something which looks attractive. Again, the stock has seen a bounce back today. Back to that 485, 490 levels, so would suggest a buy with 520 as a target, stop loss 470.
Right. Naresh, what about your BTST trades?
So first would be a buy on Bharti Airtel, stop loss at 1215, target price of 1270. Buy on Bajaj Finance with a stop loss at 6580 and a target price of 6700.
Okay, we'll let all of our experts go on that note. Deven, Kunal, Naresh, all of you, thanks as always for taking the time out and joining in. Remember,
if you like this video, then like, share and subscribe to ET Now.